Brodie Sutherland, CEO of TOCVAN Ventures, ticker TOC.CN, is here to discuss his Pilar and El Picacho projects in Sonora, Mexico, and the vision he has for them. I say that he's putting together the pieces of a very compelling puzzle, and there's just maybe a couple more pieces left at this point to figure out. But before I turn it over to Brodie, just as always, right, forward-looking statements, blue sky discussions, all standard disclaimers apply. We're going to be having some interesting conversations that will, by necessity, require him to be kind of looking to the future. So don't hold that against me or Brodie. Otherwise, yeah, Brodie, welcome to the show. This is your first time on. Pretty bog standard. Why don't you just give us, thanks for showing up, I guess, to start out with. But give us your elevator pitch, right? If you're selling us on the company, you got a couple of minutes. How do you explain TOCVAN and what you're trying to accomplish there?
Yeah, thanks, Matthew. Thanks for having me. Really excited to be chatting with you today. And really, our elevator pitch is quite simple. It's we feel the world doesn't need another junior gold explorer trying to flog a deal that they think's going to get bought out at some point. I don't think the market's there right now. It might be in the future. So with that in mind, we want to become a producer, and we want to be in a jurisdiction that we can actually do that cost effectively, and that's Sonora, Mexico. And so we're looking to turn our Pilar project into a producing asset for us and build the company from there. And it's about being mindful of share structure, which, we're happy to report that we've been around for 4 years. We've got 42 million shares out. And it's about being extremely mindful of what we do with capital and making sure that everything we do is to advance these assets and get us closer to our end goal.
Yeah, well, and I think I want to just chat about you. You're a young gun like me, so I like to kind of talk about how you've come to be here. But I mean, the tight float. I mean, I try to avoid too much slide deck kind of conversation. People can do that themselves, but for these primers, it does make sense to chat about the basics a bit. So you say extremely tight float, 41 million shares. I mean, let's just be for the historical record. Any rollbacks that you're hiding under the covers on us?
No, none. We went public 2019, 10 million shares out. Now we're sitting here at around 42 million through a tough market. So that tells you exactly where our focus is. It's about being extremely mindful of dilution for our current shareholders, and that's what we want to continue to do.
And so, what's the overhang on that? Options and warrants and their pricing, and what do we have? What do you have there? That's kind of
Yeah,
maybe
what's left out
best.
there? Yeah, so we've got 9 million warrants currently. Their average price is $1.22. So a lot of wiggle room between where we're trading today. Around 38, 40 cents. So there's not a lot of resistance that we'd see from the warrants. They're all held by friendlies too, so we wouldn't expect that as we get up to those levels. The options, primarily held by management, key consultants that have been around the company for a long time. Even those, they're averaging, I think around 60 or 70 cents. So we've got a few at the lower levels, some from early days around 15 cents that are expiring this year. But everything is priced fairly high in that. We did have a fantastic run when we first kind of rediscovered Pilar and had some excellent drill results there. And so a lot of our shareholders have been priced in at higher levels than today, and they've been patiently waiting for this market to correct and see that sentiment return back to gold and silver, which we're very optimistic that it will.
Starting to see maybe signs of life, right? I mean, I've talked about this in other avenues that you're starting to see actual damage being done to some companies, right? And I think that starts to mark that the bottom might be, if not in, we're getting close. Yeah, transitioning to you though, right? So I mean, yeah, do you just want to give just not, we don't have to get back to your kindergarten days, but do you want to talk about, your path to becoming CEO here?
Yeah, I'm a geologist by background. Was fortunate to graduate from university during a boom time, so it was a lot of work, and I was quickly kind of thrown into the opportunity to work internationally. So I spent early in my career working nearly 20 countries over a 6 year span, and that really kind of opened my eyes to what works for a project. What do you need? What are the key components? It also put me into different jurisdictions that are much more challenging than somewhere in Mexico. I spent a lot of time in the Amazon, spent a lot of time in remote Canada, Alaska, and I think that's given me a background of what it takes to advance these projects. And really, if you're looking to advance something and get it all the way across the line, you need to be in a jurisdiction that has not only the infrastructure to do that, but a mindset of being able to produce. And we feel like that's Sonora, and the fact that it's got all the technical expertise that you need as well. So we've been, even though my background's in geology, and I've been a founder of the company from the onset. My role has slowly advanced to the CEO position, and I think now it's about applying my skill set and building the team that we need in Mexico to build out these assets. And again, that's one of the key components about Sonora is that you've got all these developed mines there. So you've got personnel that understand mining. This is their backyard, and we can draw from that technical expertise and apply it. And so we're very proud of the fact that our entire technical team is built in Sonora. That's their home. Our office is there, and that allows us to really take full advantage of not only the opportunities that we see there, but making sure that we've got our finger on the pulse each step of the way.
Yeah, I mean, you touched on a couple of things that I hope to get to as well, right? And I think that, like you say, where this location is, the hurdle to the barriers to entry, the barriers to economic viability are remarkably low, right? And that's one of the reasons why I think this is a really compelling story for me. Just one last one, and I think I'm always partial to geo CEOs, geos that have to learn the marketing side of things versus marketing CEOs have to learn the geological side of things. Just a kind of a question here, just kind of for you to reflect on things. I mean, what have you had to learn on the fly, right? You become a CEO, like you say, you had some remarkable success. It's been a couple of years. What have you had to learn, like I say, on the fly to kind of become a successful CEO of a junior aspirational producer, right?
Yeah, I think it's a dynamic industry. There's a lot constantly going on. I think the big lessons that I've learned over the last couple of years being in the CEO role is that there's so many things that you can control, and you need to be on top of those. There's also things that you can't, and the general market sentiment is one of them. There's only so much you can do to push, but you know I've felt like the big lesson for me has been you've got to if there's an issue, you've got to run at it and deal with it right away. And that's been kind of our mindset is that we know what we want to do, we know what we want to build, and if there's any issues that come up along the way, we need to basically attack it, get on it right away, and use our collective expertise to find a solution for it. So that's been one of the key pieces. Obviously the market is another side of it, and it's about just aligning with the right people that understand our vision, what we want to accomplish. And on that side, you need a bit of patience as well. You need to understand you got to build relationships, and that's what we're looking to do is continue to build those relationships and grow from there. And the one thing I want to be very clear as CEO is my phone is always on. We've got current shareholders, maybe other shareholders there that are thinking about investing in our company. Call me. My numbers on all our news releases. Pick up the phone. Let's have a chat. And I'm happy to explain exactly where we are, where we're headed, what our vision is. But I think that's the key thing is that we need communication, and we want to have that open dialogue for everyone. So anyway, because my numbers on the news release, it means I get a lot of calls from groups that I might not want to talk to. So just leave a message, and I'll get back to you as quick as I can.
Yeah, and I mean, I can attest to that. Very responsive. And I find it so interesting. I mean, I say this a lot, right? But as much as this is an industry of people, right, and that ability to develop those relationships and trust is massive, right? And so having a responsive CEO. I mean, I was emailing you Sunday afternoon yesterday, look for this email right for this interview, and you got back to me right away, right? So I mean, yeah, that's like I say, kind of a testament to that commitment. I buy into it. I totally agree with you. So I've crafted here, and this is where I'm going to put Brodie on the spot here. I've crafted a little PowerPoint, and he's going to be my clicker. Even though I made it, he's going to be in charge of it here. But we're gonna what I've got here, we're going to focus. I thought we would just touch on. You've got two projects, right? The focus for today is going to be on Pilar, and I think that's natural for people that do know the story. That's natural, and for people that don't, maybe that'll make sense in 20 minutes or whatever, right? But I think we should just touch on El Picacho a little bit, right? I mean, just why don't you, if you want to just kind of start clicking through there, Brodie? Like, do you just want to work on what has been done on it? What is your plans for it in 2024? Like I say, it looks intriguing. It looks like it has a lot of meat on the bone for exploration, but I think it's fair to say it's on the back burner a bit for you guys a little bit. But yeah, you just want to kind of run like I say, kind of the quick and dirty version of El Picacho for us here.
Yeah, awesome. I'm happy to start with Picacho because we rarely talk about it because of the success we've had at Pilar. But Picacho, just kind of to set the framework here, it's 18 kilometers away from the San Francisco mine, which has been on and off production for decades. There's 3 million ounces of gold contained in that mine. They've mined about a million ounces of it. It was discovered by Fresnillo in the late 80s, and they basically sold it off because they had about 400,000 ounces of 2 grams per ton gold oxide, which wasn't big enough for Fresnillo back then. So they had sold it off, and then now it's been built out to an even bigger asset. So what's really interesting there is that Fresnillo has a long history of working and operating in this area. In the same trend, this is part of the Caborca Gold Belt. They have La Herradura, which is a huge, massive open pit gold mine. It's got 10 million ounces, another 5 million ounces in satellite deposits around it. It's huge. So they've got that long history here. They've been on the ground at Picacho, both in the past and recently, and they still hold ground. Everything to the east of Picacho and a little inset within the property. So it's got a good neighbor there. It's right off a national rail line, right off of a 4-lane highway that connects Hermosillo, the capital of Sonora, with Tucson, Arizona. So great access. Land ownership here is a family of ranchers. There's two brothers that own the land here, and they actually own the mineral title as well. So we have the agreement with them to develop this. And historically, I don't think Picacho really got a fair shake. It had seen some kind of recon, really wide space drilling by Phelps Dodge, way back in the day. There was never any follow up on that. One of the groups that had bought San Francisco mine, uh, Timmins Gold, they did some work, especially around the San Ramon prospect, and they were seeing really good indications that there was something there. But again, this was around 2012 where the price of gold then fell apart, and they never really went back. And so the project sat stagnant for over a decade. And we came across it and saw the opportunity. It's got 6 kilometers of prospective trend, uh, defined by artisanal mine workings, which are underground shafts, underground drives, significant in any way, but clear indication of high grade mineralization, and obviously getting something to go down. In one case at San Ramon, 90 meters underground. So quite significant there, but basically no drilling on it, and that's where really saw the opportunity. We drilled for the first time in late 2022 at San Ramon. We did 10 holes, 1,000 meters, all targeting near surface gold silver mineralization, and all 10 holes hit something. Probably 3 of them kind of saw the grade that we wanted, and that's really right in line with what you see at San Francisco. Um, these are kind of orogenic type gold deposits, where you need drill density or wide diameter drilling because you get very coarse nuggety gold. And if anyone wants to look at our last news release, you'll see exactly what I mean. You get those kind of VG specimen type gold samples. But we drilled 1,000 meters, really a recon program. We hit, had a nice discovery at San Ramon, and I think that's just one piece of many that we can start to build together at Picacho. And again, in our last news release, we really went back to Picacho just to do assessment work. We need to do some work to keep everything in good standing. So we sent our team out to in areas that we don't understand as well, and right away they come back with exceptional results. Up to 15 grams per ton gold in chip samples. We always take chips, we don't take grabs, and defining a new 1.6 kilometer trend. So Picacho just seems to have a lot of upside to it, a lot of potential. You know, it's in the right jurisdiction, it's got great access, and it's just going to provide us and our shareholders a lot of upside in the future.
Yeah, no, and well said. And like I say, this is one of those things where warrants a deeper conversation later, and as time goes by, maybe we can get you back on when things start to pick up there. But obviously, the star of the show here is Pilar. I mean, this is a really interesting one for me, and you and I had a good chat a couple weeks back, right? I mean, it's cheap. It's cheap as borscht to drill. I mean, the concept of actually turning into a mine is cheap at surface. It's oxides, right? So there's all these different reasons why there's all these kind of advantages. Like I say, the hurdle to economic viability in my eyes is low, right? So you have this original land package, Guadalupana and the Los Sonora concessions, which you can see is the inset there. You've recently expanded that, which I think is big, and we'll get to that. But you just kind of, yeah, like I say, the same thing. Just for people that aren't familiar to the story, from my audience that don't know you folks yet, just run us through a brief history of Pilar to kind of get us to today, and we can start talking about those other kind of details.
Yeah, Pilar has got an amazing history behind it. It was discovered by actually the Lundin family in the mid '90s. So 96, 97, they had a Mexican subsidiary company exploring here, and they hit it was 21 meters at 38 grams per ton gold, and the same values for silver. So some amazing results really, and some other holes that hit 10 meters, 10 grams kind of thing. Mid 90s, so gold's $300 an ounce. You need to hit all high grade for it to really work, and that's not really what Pilar is. It's not all high grade, although you do get those fantastic high grade results. There's also this kind of broad low grade mineralization associated with that high grade. And so for Santa Catalina, the Lundin family company there, it wasn't enough of the high grade at the time, so they had walked away from it. Uh, and after that, it was kind of held by more prospectors that saw the potential, were trying to advance it, but never really had like a big vision for what to do with Pilar. Just going back and drilling, trying to understand what was going on there, and that's part of the opportunity that we saw is that we knew that there's some fantastic mineralization at Pilar. It's all right at surface. It looked at that time to be oxide material, amenable to heap leach, and between 2010 and 2018 it had saw several drill programs completed on it. Each program came back with good results, but each time kind of during a difficult time in the market where it was underappreciated. And again, that was something that we saw as terms of the opportunity. um, there's several areas where this all outcrops at surface. It's quite visible, where a lot of the past drilling had focused, and we knew that there were several trends here, parallel trends to each other, that continued definitely to the southeast and also to the north. And so what we started to do was, as we really evaluated Pilar, got dug into the structure there, dug into the mineralization, and then said, right, how do we systematically start to define what's here and step out on that? What we discovered is that a lot of the past drilling was, some holes were vertical, and this is a vertical. These high grade structures are vertical, so that's not the ideal orientation to drill it. It looks as the overall kind of plunge of this system is towards the northeast, and some of the holes were kind of drilled parallel to that as well. So what we learned quickly is that if you're drill to the southwest and you seem to come across both those high grade structures and the overall plunge of this thing, and as we started to do that, we hit some fantastic results, and we keep doing that. And now it's about evaluating, okay, how far do these trends go. We know we've got parallel ones that have been very poorly defined in the past, and it's about now evaluating those. And then the exciting thing is that we've acquired all the land around it, and it seems to be extremely prospective. We know that this extends immediately to the north, and that's all playing into why we've focused on that first before trying to jump into a resource straight away. Is that we knew there was big opportunity to be able to expand that once we could consolidate the land here.
Yeah, excellent. No, good intro. And so, I mean, just for the sake of people that are viewing this, I have up. This is from the 2016 technical report, not written by the predecessors here. A couple of things there. You can see North Hill main zone and then the 4T. This is from the original two concessions, and then as Brodie referenced, they have significantly increased their land package. And I think this is something that, as I came across this story, right? I mean, the initial land package a little tight, a little cramped, right? And so being able to expand that for a lot of reasons, even as you say, expanding to production and have, you need space for those sort of things, not to mention additional targets, right? Can you, so let's start talking about, you have, and we'll talk about, potential resource size in a second here and all that other kind of stuff. But let's just talk about expanding you've got a geological model, you got a working thesis in terms of how you've explored these first two concessions. You have a good understanding, historical understanding, and now you're looking to expand that to the rest of this updated and enlarged land package. What are the data points? I'd asked you for geophys, and you said that's yet to come, or it's in the process of. If I read the news releases properly, but what are you working on right now to develop your targets? What data sets do you have that you're using to start to identify targets and prospects for the expanded land package?
Yeah, it's one, this image here kind of doesn't really put it all into light. Because of the angle we're looking at it. This is looking at it in Google Earth, but really what we acquired is 20 times bigger than the original Pilar
Hmm.
package that we had. So it's a significant add for prospective land around us. And the one thing that we heard a lot over the last few years, because I mean this is something we've been looking to consolidate for a while, is that don't bother. There's nothing north of Pilar. It's not prospective. There's nothing there. You're just going to waste your time. Um, yeah, we don't believe that at all. We have a model in mind for Pilar that again we have these high grade structures, very very structurally controlled. A lot of different phases of brecciation, which is fantastic when you're looking at a mineralized system. You want those kind of multi phase systems, and we know that there's parallel trends to it. And as we step to the northeast, we're finding more and more of those trends and starting to define them. And when we looked at that as the overall geological model, we know that this package of rocks, this is all hosted within volcanic andesites, and they continue all the way to the east, to the extent of the new boundary. And as those continue, wherever you get one of those fault structures, you potentially have similar mineralization. And we could see in satellite imagery that there was some kind of indications that those could exist. But what was the big tell for us, and it's very simple, is that the placer mining activity in the area has been quite extensive, especially the last 2 years, and that's coming off of drainages immediately north and east of Pilar, where in essence, like they're it's tough to call it alluvial placer mining anymore. They're basically sitting very close to where you have rock exposure and old mine workings even. And what we can see there is telling us that yes, there are other structures like we see at Pilar that are obviously mineralized, obviously because they wouldn't be there, mining gold out of the creek valleys if there wasn't. So I mean that's the obvious indicator that we cannot deny, and so for us, that's the first strong indication that we have. What's great about the work that these placer miners have been doing over the last 2 years is that they've completely opened up areas for us for exploration, and basically built in roads 3 kilometers up some of these areas that we previously didn't have any access to. And as they've built those roads, they've made new road cuts through outcrop, and that's given us excellent exposure to these other new potential systems associated with Pilar. And one example, I was there a few weeks ago. We've got 180 meters of outcrop exposed in one road cut, and you can see the alteration zonation like through that. You can see this really heavily oxidized with veining going into more argillic alteration, going into propylitic, which is your kind of further extent out. But you can see that whole zonation through that road cut. And I mean, there's no
Hmm.
clear indicator that we're onto something there. So for us, it's about mapping. It's just getting on the ground, looking at these new exposures, sampling, and letting that lead us towards our next targets. And we've got a lot to go after there. You mentioned the geophysics. There's been basically no geophysics flown on the extension in this expansion area, and that's something that we'll look at. But I think the more obvious kind of you know quicker path is going to be just getting our boots on the ground, mapping this area systematically, sampling it, and seeing what we can find. And the perfect example of that is 4.5 kilometers north of Pilar, where we have a big alteration zone. I'll see if I can find that image that you're talking about. But you know, the one bit of information that we had was some satellite aster data that was interpreted, and so the image on the left here is showing the satellite imagery, and then there's these colored polygons that are interpreted minerals that are often associated with hydrothermal systems like an epithermal or porphyry system. And you can see, where Pilar is, it's actually down on the bottom left here. You don't see a lot of response from that satellite imagery, which is kind of interesting. But you do see some bigger responses as you move to the north, and the biggest one is, again, 4.5 kilometers north here, and these alteration minerals are typically associated with the porphyry system. This is a big area. It's over 3 kilometers long. It's a kilometer and a half wide. It has seen no sampling, and we sent our
Hmm.
crew out, basically doing due diligence on when we were looking to acquire this. And the first sample they took, which I still kind of shake my head and try to figure out how that really happened. But the first sample they took was a 2 meter chip that ran 5.6 grams per ton gold and 106 grams per ton silver. And it's not right off a road. I mean, they parked the car, they walked up a dry creek bed for 10 minutes and then saw an outcrop, and and noticed the similarities between that and Pilar. And so, I mean, that right away, that tells me that there's way more to be discovered here. And the fact that we've got such a big area to go after that has seen no sampling, uh, leads me to believe that we're going to find more and more. And so, there's a lot that we can do with this. Obviously the mapping, the looking, getting into the geology is the first thing. Focusing where the placer miners are is quite obvious, and then beyond that, it's adding the other layers of geophysics, the geochemistry, and using that to vector in towards our next targets. But there's really no shortage to go after here.
Hmm. And to circle back to where I started, like I say, the puzzle pieces are kind of coming together here, right? That you it's not a wing and a prayer. I mean, it's early days and it's early exploration, but that's the name of the game, right? And this is not, you're not picking up the scraps of 50 years of 50,000 meters of drilling and pretending you can start to build you will be the first person to make this into an economic deposit after 50 years of attempts. This is fresh new land and fresh new ground, and like I say, you have that working geological model. I mean, like I say, this story resonates with me. You mentioned the placer miners a couple of times, and I think this is worthy of a conversation. And I think you had some cool photos there. If you want to try to cycle through and find them there, Brodie. I think I'm jumping around in my order a bit, but yeah, no, there, right. So a couple of there. But do you want to just discuss? Obviously, it's potentially a double-edged sword in terms of relationships with them. I mean, these guys, they'll treat it like it's their backyard potentially, and then sort of can be contentious, right? Do you just want to discuss? I mean, what is your relationship with them? Is there a formal dialogue ongoing? I'll just start there. I got other questions there. I won't bombard you with 5 different questions. What is your kind of current relationship with these guys?
Yeah, I mean, it's fantastic, really. And you mentioned that they think it's their backyard. It is their backyard. I mean, the workers out here that are operating the excavators and the dump trucks, and washing the gold, they run it over sluice box. They're all from the local community, Swaki Grande, which is really 10 miles away from our project. And so this is their backyard. And we're my mindset is quite clear with them. It's you know they're doing something that at times is obviously it's economic for them. But anyone that's watched Discovery Channel, Gold Rush, knows knows the challenges those guys go through, because it's so difficult to quantify placer gold. It's just constantly changing. They need to do a lot of work to try to figure out what's there. They're in it. They're making money. They're out of it. They're not making money. But the key thing is having a dialogue with them to understand, what are they looking at, what are they going after, and being able to work with them on that. And again, they've basically opened up not only this area but several others through the work that they've done. And it's about us having that strong relationship with them, that dialogue, so that we can then take it to the next step and start to drill evaluate these and build out resources from the sources of these placer environments. So again, the best example right now is just immediately north of Pilar, where they've gone over 3 kilometers up this drainage. And I mean, it's not coming from Pilar, all this stuff. It's coming from something else. And I think it's likely it's coming from multiple sources as you move along that drainage. And, this is the clear indicator for us. And now they've gotten to a point, that last photo where the excavator was sitting there, they've gotten to a point where they've gone fairly high up into the hills where, again, that alluvial, material is getting thinner and thinner. And they're actually right adjacent to old mine workings, old underground mine workings that were chasing high grades. So we know they're right on top of stuff in certain instances. And what's great for us is that they've, as they're moving with that excavator, they screen everything because they're washing it over a sluice box. They can only really deal with the fine material to be able to recover gold there. And so everything that's left behind are all the the bigger rock fragments. And we can basically go over that and start to map it. And the last time I was down there,
Hmm.
we'd walk along where they had, basically screen material already, and you can see, coarse fragments of breccia, the same type of breccia we see at Pilar, coarse, vein material, stockworks, really oxidized material that's been altered. It's, you can see all the indications that, yeah, they're on to something that looks very similar to Pilar, but it's just never been evaluated. And, that's, they've given us full access to the area now, and we can get in there. So it's always a balance. We're not there to ruffle the feathers with the locals, but we're definitely there to work with them. And I think this is really part of the significance of where we're at with Pilar, is that historically, there was placer development out here for decades, but only recently in the last 2 3 years have they started to really advance up these valleys. And that's really opening our eyes to what that potential can be. And yeah, it means we can move very quickly to start targeting these.
No, interesting. It's such a yeah, it's a unique thing dealing with these guys that yeah, it's they've been doing it for such a long time, and that the relationship is so key because yeah, you can understand why they would be concerned maybe that you're going to eat their lunch, so to speak, right? Let's switch gears here though. I mean, big part of the story is just so how cheap it is, right? And so, do you just want to give us your headline number? I mean, your cost per meter to drill. This is something that is a huge advantage for you, right?
Yeah, we're looking at 130 US dollars a meter to drill. That's RC. If we want to drill core, add another $40 to that. So it's
Hmm.
extremely cost effective to drill here. Again, we're in Sonora. There's probably a dozen drill operators, companies, service companies in Hermosillo, 2 hour drive away from the project. So there's a lot to draw from, but we've been lucky to work with some of the top groups there, and they've got fantastic rates to be able to drill. And talking about that number, that's all in. That's fire assay, that's ICP, that's our geologists, that's all the time, the equipment it takes. That's all in. So it's tough to be in a jurisdiction that you can get any cheaper than that to drill,
Hmm.
and is a huge advantage for us. And it's not just that; it's all the other components that are tied to that. And I know you're talking to another company later this week that really touts low cost and quick turnaround. And this is again the advantage of being in Sonora, is that we have an ALS prep lab in Hermosillo, 2 hour drive from the project, that has a fantastic turnaround. Often we see less than 3 week turnaround for both fire assay and
Hmm.
ICP, and that gives us a huge advantage. We get that data back quicker. We can make better decisions and follow up on things faster. So again, it's just Sonora's got so many of these pieces that you look for in a key jurisdiction, and that's really why we want to focus there.
Yeah. So at this point, I'm going to transition because so far we've kind of been discussing this as an exploration story, and when you and I had our first phone conversation there a few weeks back, uh, what grabbed my attention was, and you kind of referenced it in your elevator pitch, is that it's more than that, right? This is not just a classic exploration story where you're just fishing for a buyout, but I mean, your goal is to take this to fast track this to production, right? And so I think this is kind of like I say, we'll transition here and start talking about this vision you have to, in a very short kind of telescope time frame, get pouring, right? Get producing. And so I guess, yeah, again, just to frame this conversation, you just want to take a minute here and just explain the rationale, your vision behind it, and what the rationale is for getting there so fast.
Yeah. Yeah, I mean, it really comes down to, again, Sonora being a jurisdiction that understands mining, has a long history of mining. Really, all the small towns in Sonora are there because of a mine, really, in most cases. But the key thing there is, to permit to explore is um, very quick, very streamlined. We can permit a big drill program, over 2 years in 21 days, and there's not many
Mm.
jurisdictions that you can do that. We can pre-COVID, you could permit a mine development in 6 to 9 months. Uh, I don't think there's another jurisdiction out there you can do that. Now,
Mm.
post-COVID, that slowed down, and it's an election year in Mexico. There's an election coming up June 2nd, and the current government that's been in power for a while is kind of more playing to the southern states in Mexico, but has kind of been quite vocal in terms of how they want to see mining be more focused on community benefit, be more focused on environmental impact, water usage, all things that obviously we're very aligned with. But that slowed down the permitting process. So now you're kind of looking at maybe 18 months, a little bit longer to get your mine development permit back. But that is still extremely fast. And, I think there's probably a strong case that that timeline speeds up after the election, even. So we could see it return back to, 12, 18-month kind of time frame. But because of that timeline, this is the key advantage for us is that on a short scale, we can move this from exploration to production. And the cost to do that is, again, relatively low. If you look at other jurisdictions, the costs that need to go into permitting, again, over, Canada, US, you're looking at, probably 8 to 15 years for your timeline for permitting. And you're looking at millions and millions of dollars to do it. Here, a fraction of that. And that's, again, the advantage that we see is that we can move things quickly for relatively low costs. And and that's what we want to do. And we're not the first movers in that. There's other companies that have come before us that have done just that, that have built operating mines in Sonora for less than $15 million, and that's we're really where we want to be. 18 months from now, we're going through basically all the steps for permitting to submit our application this year, and then you're looking at 18 months out from that, potentially having your permit back and being ready to build. And our kind of overarching concept and vision is that if we can be at pre-construction and still only have 60 to 70 million shares out, uh, yeah, I mean, really, it's
Hmm.
going to be a huge win for our shareholders because a lot of companies that get to pre-construction, they've already diluted themselves out to 300 million shares or
Mhm.
more. And that's the key advantage that we see here is that we can build this quickly, move it to production, and then use that production to fuel more exploration. It could be at Pilar, it could be a Picacho, or it could be other assets that we acquire along the way. But this, this permitting and regulation that exists in Sonora allows us to break free from just being an explorer, and we can move to being a producer. And I think that's what the market needs right now. It needs more companies that are going, right, let's build something where we can actually create that value for our shareholders instead of really just hoping that you build something big enough and attractive enough and shiny enough that someone else is going to take you out. And I don't think the majors are quite there yet in terms of having that appetite. So this is our kind of bigger vision and why we think it can happen.
Yeah, again, you've touched on a couple of things that I want to follow up on, but I think that again that you articulate it well. This idea that you have, I mean, you're in the right jurisdiction with the right project to be able to move aggressively And this the market right now, it does reward success. It takes a remarkable degree of success. But I mean, you're trading at a $15 million market cap, and I'm going to ask you in a second. You're not quite yet, but the numbers can get kind of silly here in terms of your valuation if you can achieve that. And you talk about good projects. You can pick the right project, and it becomes a mine, and you think it should be a success. But if the value has just been blown out the back door from a tripling or quadrupling to of the float, there's no value left for the retail investor, right? So yeah, your vision, like I say, it resonates with me. But I wanted to discuss, because there are permitting concerns, and you touched on this, right? I mean, Obrador and AMLO, a couple of years back there, they kind of said, unofficial pause in open pit mining permits. My understanding is that there have been some since then, but a little bit of a tightening of the taps or whatever. I mean, do you want to discuss? I mean, is that a concern to you? Should that be a concern? Can you point to success stories in the meantime? And what to you? Why is that something that can be overcome? I guess.
Yeah, I think the main thing you need to recognize is that there's a lot of rhetoric, especially revolving around mining in Mexico, because it can be a sensitive topic, especially in states that may not have that long history of mining. There may be other complications with community dynamics where you have whether it's First Nation groups kind of tied in with the local communities, stuff like that. So I think you know the current administration in Mexico has been quite vocal that they think there should be changes in mining in Mexico. They've made certain moves, but the clear indication to us is that that's more focused on certain jurisdictions that exclude Sonora for the most part. And the other thing is that it's a lot of is that kind of rhetoric that's built around a narrative where they're trying to get to their voter base. And I look at in some of the more southern states, like Torax Gold is a fantastic story. I think they've done extremely well with their ESG and working with all the stakeholders there. And I think that shows you what the potential can be in Mexico. But getting closer to home for us in Sonora, Minera Alamos and their Santana mine, they put into production over the last year and a half, and that's an open pit that's 50 kilometers away from us. That's it's a very, I think, very similar size and scale and upward potential that we see at Pilar. And for us, that's the clear indicator that look, this thing just got permitted. We see a lot of similarities. I think also a lot of advantages with where we're at and the location of our project. And that gives us peace of mind that we can get there with these assets in Sonora. And I do expect there to be continued rhetoric leading up to the election, and we'll see what the outcomes are from that. But the clear indicators to us from the government has been they want to see the communities benefit. They want to see mindful use of water. We are in a semi-arid desert here, so of course we need to be extremely mindful of that. And they want to make sure that it's groups that have the right mindset in terms of development. And this goes back to really our core belief in that we're here to develop these projects, but to build them locally with locals. And we've got an excellent relationship with the local community. A lot of our workers have lived there in Suwaki Grande. We've been very fortunate to hire I think the first geologist to come out of that small village.
Hmm.
One of our workers is actually now going to university to become a geologist. So we sucked another one
Cool.
into the industry, and you know, but it's that it's because we're there to work with them and build with them, and again, like Sonora, it's built for mining. It's got like 70 operating mines currently there.
Hmm.
Small scale, big scale, but I don't think there's 70 operating mines in Canada. Like this is a place that understands mining. It's got a long history of it. I think if you're doing the right things and have the right approach there, that there should be really nothing that holds you back. And I think environmentally, Pilar is in a great spot. It's close to a local community, but far enough away that any water draw isn't going to impact them. We're talking semi-arid desert, very low environmental impact. A lot of things that we can do to secure that and maintain it. And we feel that it's kind of in that sweet spot of location, but also having great access to infrastructure. So, we're very mindful of all that. But again, if I were to pick a jurisdiction, I'd pick Sonora any day over pretty much anything. So
Hmm. Mhm. Yeah, and like you said, that was part of your due diligence process when you selected these projects. So we're going to bounce off Mineral Alamos here a couple times in the next few questions here because I think it's an important analog, right? And I guess I'm kind of answering the question I'm going to ask you right now. But people that dig into this, right? They listen to this or they know the story and they start doing their research and they say, "Well, fast track to production, reasonable expectations to get there." Uh, but you're not even a PA though, right? So that eyebrow that might get raised at that, right? Because I mean, you talk about your confidence intervals and 30% variability, and the ability to sort of narrow those intervals down to something that can be a reasonable, bankable feasibility, and you're kind of, you're kind of dodging that or turning it on its head, and you're moving forward without that sometimes arduous process of these economic and feasibility studies. And so, I mean, what are your rebuttals? And like I say, I kind of called my shot here a little bit in terms of that, but I mean, you have analogs to help. But what is your rebuttal to concerns when it comes to that kind of conversation?
yeah, I think the first thing is companies often they jump down that track because they feel they need to attract investment or what have you. And I think often that can happen prematurely, and it's something that we've been mindful from the start because we talked about this early on in this conversation is that Pilar you know, wasn't a huge area to start with, and we wanted to be able to consolidate the area around it to expand on that potential, and we didn't want to jump into a resource there until we had that available to us. So that's part of really what we're trying to build is being mindful of the back end size potential that we want to align with, and so that's the first thing. The second is that to go down this path of permitting for a mine development, you don't need a resource. And yeah, look at Mineral Alamos. They just put out a resource on Santana, basically like 2.5 3 years after they submitted that application for mining. So um, I think that's key as well, is that we know the permit's going to take time, so let's get it going so that we can move down that path. But in the meantime, build out what we have. And so our mindset has been, let's make sure we've got something significant at Pilar. We've done that with the drilling we've done, on the property. We've drilled 8,000 meters on Pilar so far. Historically, there was around 15,000 meters. So, we've got 23,000 meters of drilling there to draw from and start building towards a resource. And I think what we've been able to do has added to that significantly. And so internally, we know what we have. We're confident in that. Otherwise, we wouldn't be starting to pursue this permitting aspect. Um, but again, then it's about, now we've got the expansion area. Let's build that out bigger and bigger. And the best time to do it is while we're waiting for the permit. And you know, we want to be mindful of how we do that. We don't want to just go out and drill as many meters as possible because you know we can or we have time. It's about trying to identify what else is out there, get a good foothold on that, and then kind of leave it until we're producing, and then we can allocate that capital again without diluting our shareholders to develop and build those out. And that's really what we want to focus on coming up here. So I understand it's a bit of a different approach, but I feel that it's the right one for us. And we do want to build towards a maiden resource by the end of this year. And after that, we will look at whether we need to go down a PEA route to get the financing we need for a mine build. But those are all things we'll evaluate as we need to, instead of just getting caught into that same trap of trying to get out a resource as quick as possible, um,
Hmm.
and setting, I think, the bar too low for what our upside potential is.
And that happens, right? That too early and people don't understand the potential if you come out too early. This is an interesting comment that as you were just discussing this, I almost feel like you're the flip side of the coin to say like Tombstone in the Yukon, right, where you've got fireweed and you've got snowline gold and these absolute world class deposits, but they're in the middle of nowhere. And so how much is it going to cost to get them to production? We have no idea. There's so much infrastructure that has to get built and all roads and power lines and all the rest, right? That there has to be a very exacting sort of approach to the economics of that where for me, when I see TOCVAN, I see it's in a neighborhood, like you say. I mean, it's a well-established jurisdiction. There are well-established kind of costs and pricings, and the mineralogy and the geology of it are well understood, right? So that you can, and I mean, I'm kind of, not to carry water for TOCVAN here, but I'm just saying why it excites me is that you can pick data points from your surrounding neighbors where it's not theoretical but actual in production kind of content that you can kind of build your own confidence from, right? And so I mean, for me, I'll transition into discussing, I mean, a couple of topics I want to talk about, kind of potential ASIC and cost to get to production, pardon me. But I mean, bulk sample, I mean, I've got a slide up there of the bulk sample somewhere. I mean, you've done this work, you're doing some heap leaching, right? Do you want to discuss, yeah, just kind of introduce us to that and why that's so important, and kind of discuss what the outcomes from that were?
Yeah, the bulk sample was, I mean, it was an awesome process for us to go through as a team, and really to try to showcase what the potential is at Pilar, and also again take advantage of the fact that we're in this jurisdiction that has facilities around us that we can process this material. And so, our concept there was we had done some early metallurgical work, the typical column leach studies, agitated bottle roll studies, all showing very encouraging recovery of gold and silver at Pilar, and showing that it's oxide material. It is amenable to that kind of heap leach processing, and that is the lowest cost. If you're looking at all in sustaining costs, like your lowest is going to be a heap leach setup. And if you look at groups like Mineralamos, they kind of tout that they can keep that in like the 800 $900 all in sustaining cost range, which is fantastic.
Mm.
They're making a lot of money at $2,000 gold. So that's something that we wanted to showcase, and the fact that the mineralization at Pilar is right at surface was something that we were able to do quite easily. We've already had trenches cut through it, full road access through the entire deposit where it's exposed, and so we were very quickly be able to permit just a trench program to extract that material. And there was a local facility 20 kilometers away that had everything we needed in terms of space for a heap leach pad, a crusher to crush all that material, to screen it, and then to collect, the solution off that heap leach pad and put it through columns using carbon absorption, um, and test that full cycle, like exactly what that would look like using the material from Pilar. And we were very successful in showing that. And I think there's critics always out there that are saying, like, it's not a necessary step, but I completely disagree. I think it is, because there's so many things that you learn about your material when you run through that process. And
Mm.
for us, it was learning that yes, you can use heap leach to recover the metals, um, but you can also use other methods, and like gravity, like agitated leach. And so it allowed us to start to evaluate, okay, what would those type of flow works look like, and how would it compare to a heap leach setup? And we're very lucky at Pilar. The gold and silver is fairly liberated. It's not tied to a mineral that kind of makes it difficult to get out. And through that, we ran gravity studies that are showing between the gravity and agitated leach, we can get over 95% recovery of the gold. And it's so our next steps are then to start to fully evaluate that, so that we can run a comparison with the heap leach and go, right, the economics are showing that this is the methodology that we need to use to extract
Mhm.
these metals, and this is going to be the most cost effective or most profitable for us. And it's really all about just getting that metal out of the ground, and the fact that we were able to pour that Dore bar, which, um, I won't tell you my
There you
address,
go.
but like to be able to do that as a
Yeah.
a junior explorer, I think is a significant step. And it's showing where our mindset's at. It's showing proof of concept. The bulk sample, it is about collecting that data. Uh, the bulk sample isn't about making money for the company. It's about collecting that data so that in the future, when we do become a producer, we're not stumbling out of the gate trying to figure out, what's going on with the metallurgy. Why is it behaving like this? We've already gone through those steps and learned those things, and now we can apply them as we look to move towards development.
Mhm. And I think that you're demonstrating well that despite the early days in terms of potentially what you maybe people might consider early days for economic studies, that there is a lot of deliberate and very intentional sort of that approach that has to happen to have a high confidence chance that at a profitable mining business or profitable production. It's ongoing, right? So this work is happening. Having the bulk sample done, I mean, 60 to 90% is your variation. Recovery rates more than 90% in some rates, and so you're doing the work and understanding what you've got and what you have to have happen. And so maybe this is a transition. This is one that one of the users on CEO.ca asked me to ask you, and it's a classic one, and it's critical. I mean, what is the size of the prize here, right? I mean, like I said, it doesn't have to be world class deposit like Snowline Gold to make a go of it, But so based on those original two concessions, so we'll sidestep the expansion of Pilar. I mean, what is the size of the prize here? What the total ounces you think you're going to get total, and then annual tonnage if we're going to start talking about this being a mine within 2 or 3 years as well.
Sure.
And again,
Yeah.
sorry to interrupt you, Brodie, but just of course, this is again classic forward-looking statement here, right? This is all very
Yeah.
speculative in nature, and so let's not hang him by his ankles here if we're off a bit here.
Yeah, for sure. I mean, that's the thing, right? Is that we're looking at the blue sky potential at Pilar, and obviously we have a lot of confidence with what we've drilled so far, and we've got a lot of confidence in the future targets that we'll go after, within those original two concessions. But we feel that you know the upward potential of original Pilar, the small one, was around 700,000 ounces of gold, and we think that we can build towards that, but that's not actually what our original goal is going to be. It's going to be, if we can show 400,000 ounces, or closer to 500,000 ounces potentially of recoverable metal there. um, that's going to be a perfect sweet spot for us, because our vision initially is to build it out, be able to produce 50,000 ounces of recovered metal annually. And if we can do that as a start, I mean, we can build it from there, and comfortably then have 8 to 10 years of mine life, early on, and then look to expand on all of that, with the expansion property at Pilar, with other acquisitions with Picacho, and just keep building from there. But I think that's a nice sweet spot in terms of trying to trying to be somewhat aggressive, but also not trying to go, yeah, we're going to hunt for 200,000 ounces a year kind of thing. We don't need that. We just need to slowly build it from here, and look to grow, and that's what we want to focus on. I think with the expansion, our the upside potential is we are looking at multi-million ounces there. Same with Picacho. But again, let's just build out what we need as the starting point, and then grow naturally from there.
Mhm. And starting to get into the dollars and cents that all of this leads to that, and that's what ultimately matters. But you've got the analog of Minera Alamos. He said 800-900 bucks for their ASIC. Let's round up to 1,000. And people, it's this is pretty simple math. You're just going to be adding some zeros, right? $1,000 ASIC, $2,000 gold, 50,000 ounces a year, 8 to 10 year mine life. I mean, this is why. I mean, this catches my eye, right? And this is a story of will you execute? Can you execute? But I mean, the prize here is significant. For like I say, you guys are trading. I haven't checked yet today, but I mean, yeah, give or take a couple $1 million, a $15 million market cap, if I'm not mistaken. And you can see why, in terms of selecting companies that provide you that risk to reward kind of the asymmetrical opportunities, this one stands out to me, right? And so maybe having said all that, right? I mean, cost to get to production then, right? So I mean, you've got what looks to be a very profitable, decently high degree confidence plan and a vision to get there. How much is it going to cost to get you there? What's the cost to get to production? Initial capex.
Yeah, I mean, that's where it gets really interesting. Is You're exactly right. Like we kind of coming at it from the opposite end of the spectrum of Snowline Gold or something where they're just looking to build out as many millions of ounces as they can because they need it. They need to show that to prove that you can produce off this thing. So for us, again, we've got Minera Alamos there. They've probably done it the cheapest that any group has ever done it, I think. And they tout that it cost them 10 million Canadian to build their mine at Santana, which I mean is incredibly low. If you look at other PAs in our jurisdiction, you're looking at somewhere between 15 to 20 million to build out a mine. Uh, that's still like incredibly low. I mean, look at other jurisdictions, Idaho, Ontario. You're always looking at probably 200, 300 million for your initial capex to get going. And I think again that's the advantage that we have here is that for such a low initial spend, you can get producing, start making money, and grow it from there. So that's kind of our advantage that we're looking at. It's also like from here to get to that pre-construction isn't going to take a lot of capital either in a relative sense to be able to build that out.
Yeah, and so there you go again, right? That another puzzle piece sort of clicks into place here that it's not hundreds of millions of dollars, which I mean doesn't matter how good of a project you have or how compelling it is. If for a $15 million market cap company, you just can't find $200 million without absolutely just blowing out and reducing any chance at a meaningful return for people, right? And so yeah, you discuss these things that again that I find why TalkVan catches my eye. I guess maybe the natural question I have for you though is, I mean, what are your plans? And this is going to be very theoretical and hypothetical, and there's going to be conversations and things that you can't tell us because they're material, but nevertheless, it's still it's still the value of your company. The entire market cap of your company currently is what you need to raise to get there. Is this are you looking at a JV? Are you looking at potentially? I mean, do you think you're going to be able to convince a bank to loan you the money without the bankable feasibility? I mean, what are your options there? Do you think moving forward?
Yeah, I think we want to be again mindful of dilution to the shareholders. Um, Really, there's been recent examples that show a PEA is plenty to get the financing you need to build. Again, Mineralamos did it without one on their initial build. On their second one, they're looking to do Cerro de Oro. They basically did a mix of a royalty and debt to get the financing they need secured. And I can kind of foresee something similar to that, doing a debt deal where we can pay that back quickly to get online and moving. That would not dilute our shareholders. I think that's probably something we can take advantage of. Yeah, obviously it's an important question for us, and we're fortunate in that there's been some great examples of what you can do. And again, looking at Mineralamos, they were able to finance Santana with the equity and royalty deal that they did with Osisko. So that's something that we could always entertain. Their next mine that they're looking to bring online, they're doing a royalty and debt financing to build it. They do have a PA on that project, giving the financier some confidence there. So there's a lot of things that we can look to entertain, but as always, we want to be mindful of dilution to our shareholders. We, it needs to be the right group if we look to do a JV. Uh, Again, we don't want our shareholders to miss out on the upside potential that we see at Pilar in doing that. And it's not a huge amount of capital that we'd be looking for. So, I think there's going to be a lot of different ways we can go about it to finance it, but we're confident we can get there quite successfully with what we have at Pilar and build out from there. So, and it's not going to take a lot of capital to get to that pre-construction phase as well. And so I think, from here on out, our vision is to, keep that share structure intact so that when we do get to production, our shareholders see immense upside because, 15 million market cap today. If you look at a group like Mineralamos, they're 150 million plus, and they've got some management that I'm sure they get a bit of a premium from that. But ultimately, the difference is that they made that step towards production, and so if our shareholders can see a significant upside just by doing that, that's a key thing that we want to achieve.
But just option agreements, right? So you're kind of in the process of securing 100% ownership. And like I say, I've got the numbers, but can you just run through? I mean, how much is left outstanding? And maybe this is going to be challenging you for your mental math, but you're in the process of, but not yet there. What's left on the bone for 2024 and beyond to get to 100% ownership of all these three separate, if we include Pilar twice, their projects or properties?
Yeah, so we own 51% of Pilar today. We can buy the remaining 49% for 2 million Canadian, and we intend to do that, relatively quickly here. It makes all the sense in the world. It's 2 million Canadian for half an asset that we feel is going to provide tremendous growth for us. It's a very simple decision to make. On the expansion area that we've just secured, we've got some heavier cash payments on that. It's all in. We're looking at 4 million for the purchase on that. We've really just started that, so I think we're kind of looking at like 3.75 million left. But we do get a bit of a breather here over the next 2 years where there's going to be no payment. So that allows us to get Pilar up and running, and then we can
Hmm.
utilize cash from that to pay out the remainder of that option agreement. Picacho is in a similar boat in that we've been making fairly small cash payments to the property owner there for the last 2 years. Those are slowly going to start to go up, and our all-in cost payments there is about 2 million, and we've done about a quarter of that so far. So what we've built is again being mindful of where we want to head in the direction that we want to go with getting this into being a producing asset. So we can then deploy that capital without having to dilute our shareholders out fully there. So that's the mindset. In all scenarios, we can own 100% of the properties. That's been key to us. In most scenarios, we can buy out a significant portion of the NSR off them, and just trying to keep to that mindset of, yeah, there's going to be some heavier payments down the road, but if we're executing on our overall vision here, then we'll be able to make those payments easily.
And you can see how you've kind of aligned things in a way that if it's every story is always about execution, right? But if you can actually execute on a timeline that approximates what you think you can accomplish, that things come together very neatly for you in a very kind of effective way. And I think finally this draws us to an end here, Brodie. And I mean, after a 70-minute conversation, it seems kind of strange to ask if there's anything that I've missed or any. But I'll leave you final thoughts. Anything you want to mention that, yeah, like I say, that somehow we didn't talk about.
Yeah, I know it's been a long one, so anyone that's stuck it all the way through, congrats to you. Definitely owe you a beer or coffee when we can meet in person. But I think we've hit all the key points. Really for us, it's all about we're very much aligned with our shareholders. We're in this for the win. We're in it for the growth of the company, so we can all benefit from that. And I think if there's any really big takeaway, it's just that we're always available. If you want to chat with us, have questions, pick up the phone, give me a call, send us an email. We can set up a call that way as well. We just want to be there for our shareholders and be able to communicate. And yeah, especially the ones that listen to this entire video, I definitely want to talk to you.
Yeah, a little hidden Easter egg at the end here, eh? Yeah. Well, no, good. Yeah, thank you, Brodie. Appreciate your time. It was a great conversation. Yeah, very informative, and it's a heck of a story, and I'm looking forward to watching it play out. So, yeah, TOCVAN Ventures, Brodie Sutherland. Yeah, check them out. It's well worth your time. And thank you for your time, Brodie.
Thank you, Matthew. Yeah.